Good afternoon, everyone. This is Christy with Ahn Co. It is Monday, August 12th. I'm going to go over the markets with you. We had a USDA crop report that was much anticipated here. We got a resurvey of acres to give us a better idea of what is out there. USDA said they would use multiple facets of information to get this data set, and they came in with numbers for corn market that was just a lot more than expected. 90 million acres of corn planted. The market was leaning a bit lower than that. Yield was actually increased. The market was leaning towards a yield decrease here. Yield came in at 169.5 million or bushel per average. And then we came in here with just over a 2.1 billion bushel carryout. The market was expecting a 1.62, so that's 500 million bushel higher than the average estimate right now for where we thought carryout would be. Obviously, that shook the tree quite a bit. Corn was limit lower across the board from September out to July 20, almost the entire day. Right before the close, July 20 lifted off limit lower, but that many contracts, you'll have expanded limits of 40 cents here tomorrow in the corn market, and it really did. It shook the tree a little bit. There's a lot of uncertainty out there, a lot of questions asking. At the same time that USDA released their report, so did FSA with their prevent plant acres, and FSA came in at 85.87 million acres of corn planted. So you have FSA certified acres at 85.87, and you have USDA at 90. So there's a bit of difference in between, and that's going to get talked about here quite a bit moving forward. Soybeans, however, did have a friendly report, but in terms of soybeans having a friendly report, there was just a little bit less bearish than expected. You're still working with very large numbers, and when you have corn limit lower and you have all the information right now being negative for China, it just really limits soybeans' ability. So came in here with a slight decrease to carry out levels, and that was able to keep soybeans from falling too hard, down about 12.5 cents on the day. Wheat complex 10.5 lower in Minneapolis, 24 to 27 lower in KC and Chicago wheat. Really, it was a bloodbath when you look at that. Meat markets started out the day locked limit lower, and they will have expanded limits as well tomorrow. You had a fire at a Tyson packaging facility, and that's going to be one of the big questions is how does this disrupt everything? You're thinking that it's going to be a bit negative, continuing to be a bit negative, maybe push these markets towards its low, and that's one thing we'll be watching. But they started off the day locked limit, and they stay there all day long. Hog markets traded both sides, but a little bit on the negative side. Then outside markets, down market down over 400 points. Some negativity out there, just some questions about what's really to come with economy and all of that. And so really when you look at the picture, what we'll be watching moving forward, crop conditions, boots on the ground crop tours. But to be honest, these are carryout levels that we have to work with for at least a month here. So you'll have a lot of trade, and we'll be watching to see if these support lines hold for corn that we're up against on December corn. I do have to close with the disclaimer: trading futures and options involves risk loss and is not suitable for all producers. This is a solicitation. Have a great day.